Welcome to another video. My name is Robin, and as per usual, I am joined by the Russian version of Mark Zuckerberg. And today we're gonna look into look at this dude. Today we're gonna look into, you guessed it, Meta. But before we're gonna dive into it, so we're gonna go over what's in the news. We're gonna go over the company fundamentals, the important ratios, and finally the value that we're gonna give you is the valuation of the company. And with that said, before we dive into it, please feel free to subscribe and like the video. If you did, it helps us out majorly. And also, if you would like to, get the tool for yourself that we use, you can do so. And we'll let you know at the end of the video. So, Kirill, what's in the news?
What is in the news, right? The earnings are coming. And as you said, it's always a big deal, at least short term. It's always a short term big deal because when the expectations are not met, stock is tanking. Stock is tanking usually if everything is going good. Sunshine rainbows like Tesla had the other day, the rocket is going up. So we felt like maybe it's actually going to be good if we are going to do something like a prediction, let's say, video in a way, and we will try to discuss, let's say, what our concerns about Meta for the upcoming earnings release, right? And check like what's the actual value, in our opinion, we'll be willing to pay, right? So shall we go into the Zuckerberg's Meta Connect event
Sure.
real
But
quick?
before we do it, if you want to see example of a company thinking with missing their earnings or their revenue at least by a tiny margin, you can click this video. We did one about MX. You can check it out. All right, Kirill, take it away. Let's get into the Mark Zuckerberg Meta Connect keynote. So, what we're gonna expect in the Q3 earnings as well, and they have been emphasizing on this heavily, is of course their VR, AR, mixed reality. So we're probably gonna see some. We can check what they have been doing in Q2, but I'm gonna predict that we're gonna see some heavy R&D spending or at least increases of for the past years. Um, and oh yeah, they're also focusing on their AI, so that's not out in Europe yet, so we can't do any claims on that part. But I've seen it work for the US market, and it looks quite decent. They want to be the main one. I believe that's what their aim is. So yeah, that's in store for Meta. If anything to add, Kirill?
Yeah, I think what they really make emphasis on at the moment, right, is as you said, AR, VR, and I think what's it called, MR, so mixed
Yeah.
reality, right?
Mm-hmm.
So, which is funny enough, everything what is about the technologies that are not related to their core businesses that make money, right? So they got, let's say, WhatsApp, they got Instagram, they got Facebook, they got Threads nowadays.
Yeah.
Their core business is all about social medias. This is where they
And
make money.
but let me just interrupt you real quick, Sir Kirill. I've been investing in Meta, as you know. I have some background on this, but they actually it makes a lot of sense for them to dabble into VR and AR, and because for Mark Zuckerberg, it's just another way for people to connect in the future.
Yep.
So what he's thinking, instead of you go on Facebook on your laptop, or you call someone on WhatsApp on your phone, you call them in VR and you actually meet up. That of course that's what the whole metaverse is about, right?
Yep.
So yeah, just on that. So it makes sense that that they go this way. And with AI, I think just might be a buzzword. I'm not sure to what extent it will help the user experience for any of these products that Meta is pushing at the moment.
That's the thing what I was about to say. I see no problems with that at all. Like having some growth opportunities in some other, let's say, services or products, that's great because they're shaping the vision for the future. But what we also gotta make a compromise between keeping the healthy financials going on, right? So milking their existing products and services that we offer versus spending too much on the future, because otherwise you cannot really keep it sustainable at some point. So you gotta make sure that your R&D expenses and your, for example, marketing expenses for the new products are not exceeding what they're actually making from their cash cow products. So that's the only thing what, for example, was biting Meta in the butt when it went down, right? Because they were just spending too much, and investors were like, "Yeah, but how about your bottom line, guys? Be careful, you know." And that's where it tanked. And once they actually figured that out, so they cut a little bit on the growth of the expenses on that side, and then actually improved the stock price performance as well, because when investors also realize, okay, they're managing that part of things a little bit more cautiously now. So if we check real quick, right, again, like from the Meta Connect keynotes, they're talking about the VR headset. They're talking about the new smart glasses, which is pretty cool. Collaboration with Ray-Ban. Nothing, terrible. The design-wise, it looks pretty nice as well. The AI, which they're working on, all AI, all the buzzwords and everything. So that's about it. So they're not talking about any developments to their current products as well. So that's also pretty interesting, huh? Pretty
Yeah, I
interesting
think
to see.
I've been watching I think the from last year was the last time I watched one of those, and I think that's also when they just completely left Facebook alone.
Yeah.
They're just really focusing on the future with this.
Yeah.
And also good to see that they announced a new Quest, and it's gonna be cheap as hell, and they want it to be the competitor to Google's Apple's
Vision
uh,
Pro.
Vision Pro,
Yeah.
which is really not hard to beat considering the price tag, right?
And they're also at Apple. They are actually reducing the manufacturing quantities of Vision Pro because they didn't meet the demand they expected. Because the price of what was it, 3,500 bucks? Sorry, but not gonna happen. If you want to make it a mass market product, nah, too bloody expensive.
All right, so shall we dive into the fundamentals, Kirill?
Yeah, of course. Be my guest. So what do? Of course, we open up our lovely web app. And we can check something on Meta real quick, right? Yeah, basically, as I discussed before that, right? So we had Sunshine and Rainbows by August 2021, right? And then they had some tough times in terms of meeting their bottom line expectations from the investors. And then the stock literally tanked. Of course, it was also related to the fact that there was also the geopolitical tensions are going on, so the whole market experienced that and stuff like that, yada yada yada. Not gonna go into that. But then as soon as they improved the bottom line part, that also helped a lot with regards to the stock price, as you can see, and it's reaching the all-time highs and it's skyrocketing and everything is looking great, huh?
Yeah, exactly. It's they are indeed doing more to satisfy their shareholders. When I started investing in them, that was a period where there was a lot of uncertainty around it. All right, so let's just go over some of their basic stats. So they have a PE ratio of 26, which is for the tech industry is not that high. We can, for example, check with Google what they are pushing. So it's 22. It's also really not that high at the moment.
Yeah, 22. Yeah, I think both Google, Amazon, and Meta, they are not overpriced with regard to PE at least.
Yeah, so that's at least some indication of what's gonna be in this video. At least, I mean, we never know, right? But
Yeah.
still, it's a good indication that compared to the market, it's not too expensive at the moment.
Yeah.
All right. Then let me quickly go to the gross margin of 81%. That's insane.
Yeah, that looks pretty good. Too good to be true, I would say even.
Exactly. I'm curious what we're going to uncover. And then for the operating margin, it's 38%. So that's also good.
Yeah. And that's also another indication that they're improving their expense management part of things. So they're also improving the operating margin part. That's good to see. Yeah.
Exactly. And then for check marks, green all the way. So good share buybacks, like 2% in the past. What was it? 5 years. That's good. Free cash flow growth by almost 30%, which is insane.
Yeah.
Long-term debt covered by free cash flow. So just green check marks. Looks like a really solid foundation.
Yep, exactly. Yep.
So let's go into the important financial results and ratios.
Yeah, you see, like that's what we were talking about. So the selling in general were keep on rising up until 2022, and then it kind of stabilized. So it's somewhere in the ballpark of 60 billion bucks, which is nice because if you're talking about the revenue of 150, 130 for the past couple of years, then it's actually making your life easier to deliver to the shareholders. Only thing is, of course, the research and development. It also doesn't look like it's skyrocketing any further, but then again, in the ballpark of 40 billion dollars, it's also making it a more appealing thing to the shareholders, I think.
Yeah, and also with these ratios, you have to consider that we don't know how marginal it is. So these are not ratios yet, right? It's just cash. So these do increase, but then we can also see if their profit is increasing. Then yeah, it's gonna be it might be marginal.
Yeah.
We can go to the shares outstanding if you want.
Sure. Yeah.
So here we can see the drop off. So it looks steady, and it also seems that they have been really buying them back at
During the
points where
dip, yeah, like
yes, yeah,
when the stock price actually dipped, they, I think, accelerated their share buyback program,
yeah,
which is nice, because then it also shows again to the shareholders that, like, oh yeah, guys, we understand that, and we actually putting our money where our mouths are, and they're, getting their shares back because they see the
yeah,
value in them. That's good
yeah,
to see.
exactly. But Kirill, I want to feast your eyes on the selling and general expense ratio. Please go down.
Yeah,
Go
ratio.
down. Yeah,
Yes.
yeah. Look at that.
Oof. I mean,
That's
it's fine, but it's 40%. It's on the higher side. I would say as well, right?
it is on
Yeah,
the quite the high side. Normally we would say like what 20% ish.
yeah,
40% is really high. So this means that they really need to keep developing their product for it to make sense on the market. And of course, you're gonna see that when you're investing in AI, AR, VR, like all these expensive products where we are at the start of this product lineup, right? So if it's a product life cycle, it's probably we are past the stage of early adoption, but it's still, the early majority still needs to get their hands on these glasses, for example. And the same goes with AI. We don't even know what the extent is to how we can implement AI, let's say.
yeah,
So of course it makes sense that you see this, but it also means that right now their business model is heavily leaning on progress when it comes to like developing new products.
yeah, and also maybe as another highlight, and for example, the comparison to the AI use case, right? So with AI, you can actually see where what kind of problems it would be able to solve, right? For the regular consumer. But if we're talking about VR headsets and stuff like that, right? So we know that, okay, you can use them for games, or you can use them for any kind of hardcore, maybe architecture purposes, something like that, right? For design. But
Yeah,
for an average Joe, when you're like working behind your desktop every day, it's really hard to come up with something like that. So that's why you can clearly see, right? So apart from spending a lot of money on R&D, you also have to promote it to actually
yeah,
make a use case out of it, even though it's probably not there yet, or people cannot really see it clearly without, Meta just doing something about it. So this is also kind of questionable, I would say, in a way that, like, okay, Meta decided to proceed to that path of following the VR, AR, the products and services, but is it the right one? That's also the question.
yeah. That's true, and I think only the future will tell us that. But for sure, Mark Zuckerberg believes in it. But yeah, like you said, Kirill, like, but even before they started really going into the AI and VR and AR stuff, like 2017, they already spent a lot of money on marketing. So y- they have the thing that they have is they have their network, which is quite extensive, which is their unique selling point, which is their moat. But you see that they need to push a lot of money to really, you know, keep people on that network.
Yeah, and also on top of that, we're talking about that the majority of your users are the people who are like older than 30 years old, right? If we're talking especially about Facebook and WhatsApp, right? So it means is that you also have to persuade your core customer group of like saying, oh yeah, VR headset is actually cool. I'm not sure if you're actually even good with computers, to be honest. You can type to your buddies on Facebook, but oh yeah, how about some complex computation or some complex software, and then you have to put your VR goggles on top of it? That's a little bit different target audience as well.
Yep.
So they also have to nurture that one as well to go towards Meta. But Meta's products are also associated more with elderly generation. So that's also an interesting intricacy behind it, I would say.
Yeah. Indeed. All right. And if you then go to the gross margins, we see a high gross margin, really good.
Yep.
Stable as well, which is also something, uh, yeah, super nice to see as an investor, right?
Yeah, absolutely.
Um, Operating profit margin less stable, but still like above 40% marks, just or around like
I
average
think,
of 39.
yeah, and I think when it dipped below 30 in 2022, that's when we had the troubles with the financials, right? With the stock price performance. So, and then they right away they brought it up back to the higher 30s, and then
Yep.
that's good. So it's good. That's actually what it means is that the shareholders also have quite a good influence on the senior management. So it means that Meta actually cares about the shareholders, which is good to see.
Yeah. All right, let's get into the valuation review.
Yes, sir.
So as always, we will talk you through this process. If you've been watching our videos before, you know what the gist is all about. But for the new watchers, we will just go over how we value using our tool. So at the top, you can calculate assumption based on 3, 5, or the maximum amount of years, which is 8 years at the moment. And if you press these buttons, you will also see that the numbers will change. And that's also based, you can use it for your assumption, of course. So if you want to have like a clear picture, you can do 3 years, for example. If you want to have like a really accurate picture of what has been going on in the past, then you can use maximum years, but it depends on the company as well, right?
Yeah.
But for now, yeah, I would say like let's leave it for, they've been doing this for 5 years, so let's put this on 5 years.
Oh.
So we see that revenue growth has been almost 16%, and their average free cash flow growth has been 39%. So we'll come back later why this is important. Uh, you'll see the free cash flow starting point. You can do last year, for example, if you want to, but you can also do whatever you want yourself. Um, so if, for example, you want to do like one, that's possible. If you have some insider knowledge that it's going to be higher, then you can do whatever you want. And the projection period is for how long you think the stock will last, basically, or maybe, you know, what you want to see the value of the stock is after a certain period of time.
Yeah, I think this one is a bit of a tough cookie again, and what we usually have in terms of discussions about the tech companies, right? It's usually in the ballpark of no more than 5 years, right? Especially when it's high competition and stuff. Only thing is, I would say with Meta, it's a little bit different because their user base is quite stable already. So it would be hard to see, for example, people who would be using Facebook switching to something else because, well, they just really got used to the platform. WhatsApp, Instagram is also, you can say, quite big players on the market. So it's, yeah, of course, you got TikTok, for instance, but it's more for a little bit of a different target group. TikTok is for younger people. So 5 years, I would say, more than realistic.
Okay.
2 years is a little bit too much. Too little. Too little.
Exactly. For discount rate, we keep this normally at 10%. You can do whatever you want, but we find we are very comfortable around this number. But you can, of course, do some digging on what this does to our formulas, and then you can just optimize it yourself. So for the estimated growth rate, so this here we can, for example, take the average revenue growth rate of 5 years, or the free cash flow growth rate of for the free cash flow. It's up to you. And you can also go, for example, to Yahoo Finance. I will just do that right now, where you can actually see what the analysts think Meta is going to grow in the next 5 years per year. So that's also going to give you some really good estimate. And if you really want to be accurate, you can take the average of all these numbers, and you're going to find some truth in that. So let's see. So the analysts think that for the next 5 years, Meta is going to grow with 13%. So
I would say that's
that,
something that makes sense, to be honest, because
yeah,
maybe it's a little bit on the lower side, I would say, because if you're growing your revenue by 15-16%, let's say, in a way, then they're actually doing it a little bit on the lower side for some reason. I don't think that's plausible, to be honest. But even if you're talking about double digit growth for a company like Meta, that's already still good. I think that's great.
yeah, yeah, exactly. So then we did that,
Shall we
and
do
then we're gonna go,
15? Shall we stick with
yeah,
15?
let's
Yeah.
let's do 15.
Yeah.
Um, yeah, or you take the average, 14 and a half, whatever you want to give you. It's not gonna make that big of a difference for
Nah,
5 years at
not
least.
really. Not really.
For the projected PE ratio, what we can do is we can, of course, also take the average PE ratio of the past 5 years, which is 23. I think that's also decent considering,
Yep.
it's a growth stock. It's also below the 23 right now. So I would say just 23 would be fair.
Yep.
Required rate of return is something that you want to put into as something that you want to get out of the stock. So, for example, you want to have a yearly return of 12%, 15%, 20%, 2x, 5x, 20x, whatever. You can fill it out here. We normally put this at 12% because we know that the average S&P 500 is delivering between 7 and 10% per year, but you want to have a bit of extra, returns because you're taking a bit more risk. And then for the margin of safety, me personally, I would put this around 15% for myself. I have been investing in Meta for quite some time. I sold it off last year, but I'm quite familiar with their products and their operating and their business model. But if you, as a viewer, have less insight in Meta, then I would suggest doing something else, like maybe 30% or 40%, or if you really risk tolerant, you can even do 0%. It's only gonna affect your buy-in price, let's say. All right, let's click the analyze button. And what will we see?
Hmm.
All right,
That's interesting.
that's quite difference.
Yeah.
And I'm looking at the formulas, and also I think the only thing that's holding up the 393 euros is the target valuation formula.
Yeah, because this one
Because
is a
the
big
high,
one. Yeah.
yeah, because the high PE probably.
I think EPS is also on the good side, right?
Mm,
So if we check the earnings per share for last year of almost $20, that's I think what drives it quite high. But if we for example discard that one, it's gonna drop. Yeah.
yeah. All right. So this is an interesting case. So we can see, we will be able to see in one day actually, what the earnings are going to do to the price, and if it's going to reflect the fair value as it is now, or if there's something rainbow, sunshine, unicorn in the earnings release that's going to affect the valuation in a positive way. So with that said, I think we covered the ground for you.
Yep.
So the only thing that's left for us to do is, where can we buy this tool? Where can we get the subscription or the free
Yes.
trial? It's up to you. We have it all.
Exactly, it's up to you guys. So what you do is you go to 930.com. We'll leave a description, of course, below in the description. Jesus Christ. Yeah, and then as Robin said, you can just select for yourself what you want to do. If you like our videos, if you like the way how we think behind the valuation of the stocks, you can just check it for yourself and, for example, just go ahead and test the trial, fully free, no commitments, nothing whatsoever. If you just
No
only
credit card details, by the
Yep,
way.
yep,
It's only your email.
yep.
And we won't even spam you with marketing unless you give us permission to do so.
Yeah, exactly. So we're all GDPR in
Yeah.
everything. So we're trying to behave, be a good company, let's say. Yeah, and then you can select a starter, for example, just one-time payment, and you'll have unlimited valuation and watch list. And if you want more, more upcoming features, something cool, for example, the macro dashboard or the stock screening tool that we're developing at the moment, you can get a subscription. If you are getting one for the year, even better. You get a free month of trial, and then you're paying 20% less if you go for the full year. So everything for you guys. We're just trying to make it easy and accessible, as we say in every single video of ours. So yeah, really hope
All
that
right.
you will like it as well.
Exactly. And with that said, crew, thank you for your insights. Thank you for watching. And we'll see you guys in the next video.
Started recording. I'm sorry. It was such a good start. Fuck's sake.